Wednesday, December 28th, market analysis, Stan Ehrlich. As usual, I start out with the S&P 500, but Christmas is over. I'm back from family and the Southwest Airlines debacle that I got caught in, my wife and my son. Thank you, Southwest. Anyway, we're home, back to the markets. We have a relatively dull holiday market scenario so far. Very typical that nothing happens in a particularly dramatic manner. Well, very often, although sometimes when your back is turned, things happen big time. But so far, that's not happened. Santa Claus Rally is well in progress. We have, and this is not the equity plot, quite up to date. So we have a small loss on 2 out of 3 of the trades and a little bit larger loss on the first entry that was on December 21st. And the entries are very similar on December 22nd and December 23rd, which is 1, 2, 3 days before Christmas, which was on a Sunday. So December 24th was Saturday and December 23rd was Friday. So it was Wednesday, Thursday, Friday. A little while ago, a couple of the trades were slightly profitable and one was a loser, but these lines are not updating at the moment. Okay, I am expecting a rally. The Santa Claus Rally, if it works, is buying in general just before Christmas and selling out slightly after the new year. The first, second, third business day of January, you offset the long positions. We have it down to the exact minute. As far as historical likely profitable entry times are concerned, our track record is pretty darn good. We published it. That's all I'm going to say about the Santa Claus Rally. So I don't expect much more downside movement, and I expect to see a rally here very soon. One of the problems with the Santa Claus Rally is there's no money management, and that's not what I would do. If the market makes a new low for the trend, I would either get the heck out of all the positions or lighten up at a minimum. You can usually get back into your trades if you see fit. Okay, so far, not the greatest, but we'll see. So the S&P 500, as far as the daily data is concerned, is holding this morning so far around the same lows that we've seen for the last week and a half, except for one low, which was on December 22nd. But the closing price that day was above the previous lows a few days earlier, and therefore a very minor, friendly kind of technical analysis indicator. Not particularly profound. Market came up the next day, which would have been Friday of last week. Monday's a holiday. Tuesday, yesterday, it dropped off a little bit, basically an inside trading range day. And today we have a slightly outside trading range, higher high than the previous day and lower, obviously, than yesterday, which doesn't, to me, mean much at the moment because we're not overbought, which would be a sell signal potentially. So we are at support. Support is holding. What happens if we make lower lows by the close and close below 377, let's say? You got a new low close for the trend, not particularly good usually, and we're not oversold yet. And I would expect a little bit more weakness. That doesn't mean the Santa Claus Rally won't work. It just means it gets a little scarier. If the market bounces back to close higher on the day, that's a pretty good sign. The support is substantial because we tested it this morning, especially if we were to close above yesterday's high, which would be around today's high or higher than today's high so far. If that happens, you've got a bullish engulfing, although unfortunately it's not oversold. So I'm not going to get a green bullish engulfing like we did on October 13th. What a whopper of the classic buy signal combination that I've been looking at and studying and analyzing and forecasting with for decades. I've been in this business 52 years. All right. So I also have to point out something else. And this is real early in its makings. About a month from now, if we are a little bit lower than we are, let's call it 365, give or take a couple of points up or down, but in that ballpark, 360s. And then we see oversold conditions and a bullish engulfing, or at least some sort of the beginning of a rally. You could have a giant head and shoulder bottom. The first high after the first shoulder is the beginning of the neckline, August 16th, and then you would draw the line across the high made only December 13th, just recently, and that would be your neckline. I'm not going to draw it in right now, but it's too early. I've got approximately a month to wait, maybe even 6 weeks until that last shoulder develops. And it's kind of a stretch as far as a commentary is concerned, because I really don't want to go down too much in 4 to 6 weeks. Come on, that's mostly sideways. So my opinion on the S&P 500 is still possible. Don't do anything about it yet. Bottoming out formation, but the long-term trend is down. We stopped at a major bear trend line, the only major bear trend line, for the 4th time just recently on December 1st. And the trend is, the current quotes are close to the lowest low closing. Even if we close right here, it will be a new low closing, but not below the previous low. So it's not doing very well. This market looks like it could fall apart again, which I don't want, mostly because of the Santa Claus Rally history, but it doesn't work every time. We're also close to a support level, the red zone that I drew in. I could stretch it a little bit further to the right. I'll probably do that for tomorrow. Okay, let's go to the DIA. The commentary is very similar, but there's idiosyncrasies involved in every index. The DIA maintains its current quotes above its previous major bear trend line, and that is, from a long-term basis, potentially pretty bullish. So that totally conflicts with the S&P, which is not particularly weird if you're dealing with major tops and bottoms. Some indexes don't look right and some do. And this looks potentially bullish, but all we have to do is come down and close below 325, and you've got a new low and a new low close for a couple of months. And that would kill almost all bullish indicators as far as I'm concerned, and cause it to drop down considerably over the next few weeks after that into the first couple of weeks of December. So that's the DIA, caught in the middle. It's been the strongest index in the last several months. The weakest has been the QQQ, and let's look at that one. Well, we are at a new low for the last, a new low since, and very close to the low, November 4th. So it's almost been 2 full months, a little bit less. And closing where we are right now, believe it or not, would be the 3rd lowest close for the whole darn bull market for the QQQ. We need to break below and close below 258, let's call it 259 flat, which is close to today's low, in order to make a new low close and a new low, except for one other low, which again was October 13th. That was the October low. I have to stress it again. It worked fantastically this year, and I forecasted it a month and a half in advance. Of course, I could tell you right now, next year is going to have another October low, but that's a bit of a stretch, isn't it? So the indexes are relatively calm, sinking somewhat, showing some bearish tendencies, but nothing is particularly dramatic at this particular point. Hey, let's go to futures markets. Yay! Now, the soybean meal doesn't have anything really going. It got overbought, pulled back. The trend is up, intermediate to longer term major breakout to the upside a few weeks ago. So I'm friendly to bullish on the soybean meal. Next chart. We have a bearish engulfing ER sell signal today in cocoa. There goes your Christmas cocoa down the tubes, what's left over. So I'm bearish as of right now, assuming the closing price is below yesterday's low. Closing price is below yesterday's close. Then we have a red bearish engulfing and an overbought condition, and that's my signal. just like what happened on November 11th. I'm not finding anything as far as another bearish one, and a bullish one that happened on May 13th. That didn't work that well, only for a few days. So today's a brand new sell signal in cocoa. Next chart. Crude oil, longer term trend down, looking for a test of lows and or new lows soon, probably another week or two. What can I say? My ER signals were clustering, and we did get the highest high for the whole bear market we've had so far, creating the second high and a double top way back on June 14th. So a little bit bearish on crude oil at this particular point. Not a super fast bear move, but you know, the usual, what we've seen here for months so far. Next chart. Live cattle. Not overbought yet. Trend is obviously up. Look to be a buyer on minor downside corrections in the 156 ballpark, 156 and a half. I'm friendly. Next, natural gas. Getting close to overbought, very close. I wouldn't go short at these levels. You're going to sell it in the hole. I'd look for a buy signal. If you get one, I'd go long. If it only gets oversold without a buy signal, then I'd expect a bounce up to resistance and a continuation after that of the bear trend. Next, high-grade copper. Having a little trouble, slightly below 4. A little bit of a double or triple top, potentially. Trend is up. New highs for several months since July. Like the way it looks on the average. Pardon my cough. We had a buy signal on September 28th. That's what this system is built for picking tops and bottoms to the exact day that they happen. It's an automated system, 100%. You don't have to do anything. It will get you into a trade and out of a trade automatically. So I am mildly friendly on high-grade copper. Next, platinum. Sideways trading range for a couple of months now, going sideways where you have a slight tendency for higher levels. Can't say too much about this. Next, bond futures. Aha. Over the Christmas weekend, we saw significantly lower levels. I did talk about this market going up to these levels that it reached, plus a little bit more. I did talk about the resistance level that it reached and expected it to turn back down again. And so far it did for a pretty good move down. Now, something like the commentary on the stock market indexes, particularly the spider, there is a chance that we could be building a longer term bottom. It's going to take weeks, and that's a couple of months, 2, 3, 4, possibly, for this market to hold at certain support levels and start to show bullish tendencies, which has not happened yet. But I think there's an opportunity on a long-term basis coming up in a while, meaning weeks or a couple of months. For the moment, it's a little oversold. Don't go short here. Look for a bounce and go short at slightly higher levels, around 128 in the next few days. Next, we got the 10-year notes. Absolutely the same commentary, different prices. Next, we've got the wheat. Got to again point out, and you don't see this very often. When I say very often, I mean once every decade or something. A gigantic bearish engulfing at the top of a series of limit up moves day after day. And then we have a ton of strategy that picked the high day. For now, I think it's going to turn back down again after maybe a slight bit more rally, but not very much. Next, live hogs. Approaching a bear trend line. Not overbought, at resistance, probably going to turn down pretty quick. I'm neutral, not too much to say here. The S&P 500 E-mini is, of course, the stock market index, and same thing I said about the S&P SPY. Next, sugar, got overbought, No surprise it had a sharp break. Sometimes it's not a sharp break. Sometimes it's fairly mild, but a break. And I would expect this to bottom out shortly, maybe a little under 20, 1950 to 20, and then turn back up again. The trend is your friend and the trend is up, and we've had new highs for many months. Next, coffee. Pick the bottom of the market with a green bullish engulfing, oversold conditions, ER buy signal. So I'm modestly friendly, and looks like we're in the process of a breakout because we could have a new high close and a new high. Although I don't like the fact that the closing price may not be above the previous highs. Usually that's much, much better. Could happen tomorrow. So I'm friendly. Next, OJ, overbought, slipping, looks a little like a head and shoulder top. Not quite sure about that. Kind of small, a little bit goofy. No comment. Next, silver, running into a little bit of problem at a resistance area. Look at way back in February, March, where there's some tops and bottoms in that ballpark where we just came up to and stalled and starting to slip off from it. So I'm bullish, but a little bit more downside correction potentially. Next, corn. Hey, we got the bottom day on December 7th. I screamed bloody murder at the time. No surprise, it's not, it's heading higher, but hey, that's all history. You can't turn the clock back and buy it again back on December 7th. Wish you could. We're overbought now. So this is no place to go buying it. I'm expecting it to turn back down slightly any moment, any day, very quickly, but it's not necessarily going to turn back down that much, although we are in a significant resistance area. So I got to keep a close eye on this. I would be looking to take profits, tighten up your stops, protective sell stops. Next, soybean oil. Hey, same exact comment, bullish engulfing, great pick as far as the lows are concerned with the strategy. Didn't quite get overbought. So although I'm neutral to maybe a day or two more of a little bit of a dip, I'd be interested in going long again or getting into a long position. Carefully. You missed the turning point. Next, gold. Not much of a comment. Slightly higher, slightly friendly. Next, soybeans, king of the grains. Sideways for a long time. What can I say? Take a nap. Nothing happening. Next, heating oil. Almost the same commentary. Our strategy did pretty well, picking off the major top here for quite a while back in June, and another gigantic sell signal back in March. Lately, a few that worked okay, nothing to write home about. So I'm neutral to a little bit bearish. Next, soybean meal, got overbought, settled back to some support. Not quite as low as I would have expected, but pretty close. And now heading north again. Trend is up. I'm definitely friendly, looking for new highs. And we're back to cocoa, a bearish engulfing today. That's it. I'm not going to go into, well, I'll touch on forex for a moment. We had a couple of great sell signals lately in the euro dollar. So far, we picked the top of the rally, but we haven't had any significant break yet. So I am expecting it very soon. And the DIA is going to be a mirror image of that, but we do have 3 buy signals lately. Not that that guarantees anything, mind you, but it tends to be a good sign. So I'm looking for the dollar index to work higher right away. Dollar to the yen. Got the top of the market back in October. Great signal. What can I say? Still bearish. It's going to get oversold occasionally. It did 3 times already on the way down, and we're not oversold anymore. So I expect it to turn down again very, very soon. Bearish. Australian dollar to the US dollar. Too bad we didn't get a sell signal a couple of weeks ago. I did get the bottom of the market. neutral to friendly, US dollar to the Canadian dollar. We got the top of the market to the exact day. We got a buy signal very close to the lows, 2 days late. It was oversold during the lows, but I also like to get a green, at that time. It didn't happen. It came close, but that doesn't count. Neutral at the moment. USD, CHF, and you understand I'm basically looking for the green and red. And there's your green on December 22nd, the day I left for the Christmas holiday. Buy signal, we got a retracement. We're long, we're losing a little at the moment. We're not stopped out yet. I'm looking for a rally to get higher than the highs of the last few days. If we get that, then I think we're on our way up for a bit. Otherwise, I would be waiting to be a buyer for a little bit more conviction, a little bit more bullish buy signals on this. And lastly, the euro to the US dollar. I'm sorry, the euro to the British pound. Overbought, expecting a little bit of a dip. Not too much. Fairly neutral here for the moment. And I'll leave you with that. I hope you had a great Christmas. Happy New Year coming up just in a few days. Looking forward to 2023. Should be a very interesting year. And also early in the year, I'm calling it February, the beginning of another major long-term bull market that will last, I think, for a year or two, maybe more than that. Stan Ehrlich, Technical Analysis. You have a great day. Signing off.